What's up, y'all? Welcome back to another episode of Sunday Charts. This is episode 2. Before we get started, I just want to say happy Mother's Day to all the mothers out there and anybody celebrating their mother out there. Have a great day. But for us here, we're going to get into some charts today. One of the main things I want to look out today is uh, I want to take a look at the VIX. The VIX is a volatility index and it gives us a lot of insight and helps us into kind of just the movement of the market. And the VIX usually moves inversely to the market. So if the market's going down, volatility is usually higher, therefore the VIX is going up, and vice versa. If the market's going up, the VIX is usually falling. And there's key levels on the VIX that once we hit there, it's pretty good indication that we might see a reversal back down. So during these tariffs, we saw the VIX run up crazy into the 50s, which is extremely rare for the VIX. And anytime the VIX gets that high, it doesn't stay that high for very long. So when you see the VIX above, honestly, when the VIX gets above 30, is when your ears should kind of perk up for like, okay, we might see a reversal here. So when the VIX gets high, that means the stock market is dropping, and the VIX at certain levels gives us good indications of when to buy stocks. So the first thing I want to do is just look at the VIX chart and just kind of show you guys exactly what I'm talking about. So what we have here is the VIX over so this goes back all the way to 2010. As you can see, ignore the lines here, but what I want you guys to focus on is, as you can see, there's a lot of price action down here around this $11 to like $25 range. You see all this scribble scrabble right here, and then you see these long wicks up, and then they immediately drop down. So what we want to look at is basically just the history of the VIX hitting these high levels and what it does, how it reacts when it gets to them. And why this is important is because we just had a situation where the VIX was super high. And yeah, it's a good indication of when to buy stocks. So let's take a look. So what we had the last a couple months ago was right here, this area here, where the VIX hit a high of $60. And that is extremely high for the VIX. So what I just want you guys to realize is the VIX is a great indicator of when to buy stocks. So what I mean by when I say that is, like I said earlier, if the VIX is super high and going up, the stock market is falling. But the great thing about the stock market and the great thing about charts and technicals of stocks in general is the ability to notice patterns. So as a trader, and if you want to be an active investor, so there's more passive investors that just put money into a 401k on an every month basis, or might dollar cost average into stocks automatically, have automatic payments set up into a certain index fund or certain basket of stocks every week or 2 weeks or every paycheck. That's a passive investor, and that's great. Over time, you're going to do very well, and that's a great way to build wealth. But for the more active investor who really wants to pick and choose their spots of where they're getting in and out of the market, the VIX is a really good help and indicator of where those places might be. So let's go over some of the history of the VIX. As you can see here down at this $30 level, all these pink circles here, 1, 2, 3, 4, 5, 6, those are all VIX basically getting up around the $30 level and then rejecting. So why I said earlier that once the $30 level of the VIX hits, that's where, as buyers in the stock market, we should start to gain intrigue, and we should start to look at these places as entries into either long-term positions that we've been waiting for, adding to positions that we already have, or possibly even taking, a long call position on certain stocks that we've been waiting to enter as trades. So yeah, when the VIX hits 30, you see all these multiple places it hits and then rejects. But you can see it gets a little higher, 35, this little area here, it's 35 and rejects. But really, what when you want to buy high is when you see these spikes up above like the 45, the 45, 48, $50 range. I'll go back to the long-term VIX chart. This goes back all the way till 2010, and you'll see up around this 48, $50 range, these circles here, we hit rarely. So we hit in 2010, 48 we hit in 2011, 2015. So that was a 4-year gap before we even got this high. 2015 to 2018, that's a 3-year gap. Again, here the VIX, this is COVID. The VIX shoots past 48 and goes all the way to 85. So that's super high. So that's 18 to 2020. That's another 2-year gap. And then finally, we just hit again in at the end of 2024, and then right here 2 months ago or last month in 2025. So what I want you guys to realize is how rare it is that we hit these levels, and then how the market reacts when we do hit these levels. So you see every time, besides this 2020 crash, which is a pandemic, every time we hit this $40 range, $48 range, $48 to $50 range, the VIX immediately drops. Like I said, we want to drive home the concept that when the VIX is going up, the market is going down. So when the VIX spikes up to these levels and then immediately drops, what's happening in the market is these big spikes in the VIX are big drops in the market. Excuse me. Let me make that clear. These big spikes in the VIX are correlating to big drops in the market. And then once you see these big spikes hit this $48 range, and then you see them drop. So look, here in 2010 and 2011, we hit up to 48, and then look, these are weekly candles. So we hit here, and then this next week is red. We drop all the way back down to 25. 2011, we spike up here, we drop all the way back down to 30, and then we come back up again and retest like the 48 level, and then we drop back down, and then we go all the way back down to like the $15 range. Right here again in 2015, this is just a huge wick in the 1 week candle. Comes up here past 48 up into 52, and then it drops. We end up closing the week down at 25. Again here, 2018, a big spike. The week up to like $50. The week actually closes at like 30, and then we drop by the time next week we're down at 21. So these are patterns that are showing us that when the VIX gets to these levels, it does not stay there very long at all. I was actually talking to my brother. He didn't buy the VIX exactly, but he bought a leveraged volatility index, UVXY, I believe it was. And he had a good entry on it. He got it like $20. And then the VIX spikes up to 50. The VIX is creeping from like 45 to 50. And then at one point, it opens the day at $60. And I kind of just text him like, bro, sell your volatility position or like trim it significantly here. It's just because we have the knowledge and information right in front of us. When the VIX hits these levels above 48, it does not stay there very long. And not only does it not stay there very long, it drops very quickly. So, and that's the thing with like investing and trading is like a lot of times your emotion will get involved, and it kind of blinds you from what you need to be doing. So a lot of people's minds, like, we have this crazy president who's completely unpredictable, and he's doing all these changes with all these tariffs and stuff. Like, things are going to get really, really bad, and the stock market's going to drop really, 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 really bad. It's going to keep dropping and keep dropping. And for 2 months, it went from an all-time high to a bear market of negative 20% in 2 months. So we did get that. But we have to have some checks and balances with our emotions, and we have to kind of stick to the history that we've learned through studying some of these charts. Like I just said, going back to 2010, a 15-year period, when the VIX hits this $48 level, it sells off very quickly within the next week or two. So if you're ever in, let's say, if you ever are in like VIX calls or volatility calls, betting on the volatility is going to go up, you need to understand that when it does go up to these high levels, it's not going to stay there very long. So that's one thing to know. Also, like I said before, when the VIX hits these high levels, it's time to buy stocks. So anytime the VIX is hitting $48, we know that it's not going to last there very long. If the VIX is at $48, the market's been dropping super hard. The VIX is at $48, we know it's not going to last very long. If we know it's not going to last very long, we know it's going to go down. And if the VIX go down, stocks are going to go up. So smart investors, when they saw the VIX, it'd even be smart. Once you see the VIX above 30, 35, if you want to be safer, start buying stocks. And yeah, okay, the VIX might be at 35, you start buying stocks and it jumps up to 60, and then the market might be down another 10%. Okay, but long term, even over a span of 2-3 months, you're you're more than likely gonna make money. So yeah, the good investors, some people in my trading group at $48, we start buying stock and buying long term, leaps, option positions that are years out. And now look, the VIX went from 60 and now it's at what, $21. So the VIX is down what, almost 70% from the recent $60 high, 65% from the recent recent high. And stocks have, what have they done? They've bounced crazy. The stocks are up crazy over the last 3 weeks from the bottom that we put in a month or two ago. So this is the VIX. It's important. Mark off these levels. Set alerts on the VIX on these key levels. And I'm also saying this. I'm not saying the VIX can't get back up to the level. We could have some more crazy news about tariffs or whatever. Although I do feel like the market is becoming desensitized and even numb to these tariff news. I think good news is going to be more reactive in the market than bad news. I think we've got the worst of the bad news when it comes to these tariffs already. And I think the market isn't reacting. So like China, we had news with China that, we might try to get it down super low, and then the market bounced. And then Trump kind of said 80% sounds about right, which is higher than a lot of people were thinking. And the market didn't really react. And I think it's just because we already had some bad news about tariffs. We already know that we're in these tariff wars. And unless we get some really, really, really bad news about tariffs, I don't think any small amount of bad news is going to send us significantly lower. Now, can the market go lower? Yes. Does that mean it's going to be because of the tariffs? Not necessarily. Can it be because of the tariffs? Yes. But we're just going to wait and see. But the VIX is a great indicator for me of when to buy and even sell stocks. You see down here all these low levels of like $11 down to $8. If the VIX ever gets back to like $11 to $8, that means the stock market is going up or running very significantly. And that means at these levels, the VIX is probably going to bounce, which means the market's going to drop. So if the VIX is around $11, between like $8 and $11, it's probably time to sell stock. Even below like $15, it's probably like, okay, let's take some profits. Let's trim here for like longer term like trades. That's a good place to trim. And then if it gets up above 35, 40 and gets up into the 50s, okay, this is time to buy stock. The VIX there's people that heavily use just the VIX as their entry and exits into long-term positions. The VIX is at 40 plus. Let's trim some of these positions. The VIX is high. Volatility is high. I'm sorry. If the VIX is at 40 plus, let's buy some stocks. The volatility is high. Stocks have been falling. The VIX is at 40 plus. The VIX doesn't stay at 40 plus very long. It never actually stays at 40 plus more than a few weeks, just over the recent history. Let's buy stock. If the VIX drops down to, $15 to $10, it's time to trim some positions. The VIX is super low. We might see an increase in volatility coming soon. This is just kind of the ways to kind of think about the market. You use different indicators and different pieces of data and different pieces of, insight that the market gives you and that some of these charts give you, and you put them together and make decisions. So that's kind of the importance of the VIX when it comes to entering the market. Now let's get into some stocks. First of all, I want to review a couple of the stocks that I called out a couple weeks ago. So Palantir, this was an easy trade, folks. It don't really get much easier than this. So Palantir, I already had these marked off in my last video. Go watch it if you want. We saw here around this, $99 to $100 range. It's a clear support and resistance range. Right here, back on, what's the day here? 1 second. Right here on in early February, we come down here and bounce. Then we end up dropping below it at the end of February. Then we come retest it here in March, at the end of March. We reject. We come up and retest it here again at the beginning of April or mid-April. We reject again. This is a very strong support slash resistance. So what I saw was this candle right here was the first candle to break above $100 and close above $100. And I called all this out in my last video before it happened. So I'm not just reviewing this stuff like, oh, you could have made money. I called this out 2 weeks ago. So yeah, above $100, what I did was I bought calls, and as you can see here, from the previous 125 high, we basically dropped straight down to 100 in 2 days. So we go from 100 to like 95 in 2 days. Very, 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 very quick sell-off. So when I see something like that and I don't see a whole bunch of like consolidation within this range, I know that when we break back above this $100 level, that there's not a lot of resistance, so there's not much like past price action that's stopping us from going straight back to the 125. So we drop straight down here, come all the way down, blah, blah, blah. We finally break this $100. So in my mind, my next target is like, we're going back to all-time highs. So I was able to enter right here at the close of this candle, which was $100.82. Bought calls 2 months out. So I bought June 20 calls just to give myself a little time. And we ran up to 125 leading up into earnings. So the day before earnings, I cut this contract. Now, a lot of people gambled on earnings and they held contracts, and Palantir ended up selling off like 10% the next day, and a lot of people lost a lot of money. But a great strategy to have is find great companies that have a lot of trading volume or a lot of, good sentiment around them, and play them leading up into their earnings. My strategy, besides just like I made some good money today, I have $100, $200 to throw at this stock's earnings report. If it goes to zero, I don't really care, type of thing. But when it comes to my trading strategy as a whole, I'm not playing earnings. I'm playing run-ups into earnings. I'm getting my money and I'm getting out. So Palantir broke $100. I called my target. We had a little resistance here at 110, and it's a psychological level of 110. Like we might run there and then reject, but we saw strength in this candle. We passed it, and we went right back to all-time highs at 125. So it went from 100 to 125 in a week and a half. And that's like a 200% trade that I hit there. Another one that I called out in last video was CrowdStrike. Very similar chart. It basically looks pretty damn. It's pretty much the same chart as Palantir, besides it actually comes down and forms like this perfect double bottom here. So yeah, this little zone here that I drew out with this box, it's a lot of consolidation in this area, but once it cleared this level here, and even this line up here on this daily candle, get in. And as you can see, we just dropped straight down from all-time highs here. We go straight up to all-time highs here. So there's not much in the way stopping us to get back to all-time high. So we break this little level here, and then we run up back near. It doesn't hit quite all-time highs, but it gets close. And yeah, I called that out too. Now, for the week coming up, 3 stocks I want to go over. Robinhood. Beautiful setup. Let's take a look. So what we have on Robinhood here is a double bottom. So what I mean by double bottom is this here is one bottom. This drops a little lower, but that's a bottom as well. And then we shoot up past this little neckline here. And then what you can see is this support and resistance level. So we come up right here to this, about $53 level. We reject down a little bit. We break above here, and then we come down and retest it, and we bounce. Once you see a rejection here, a break above, a retest and a move back up, that's a confirmed support / resistance flip. So we had a resistance level, now turn support, bounce. We drop down below it, We come right up here and reject it again. So that's just further strengthening that level there that we know is a resistance or a support. So what we're looking for here, and then on this candle here, this big red candle, we actually open above it and then it sells off. So some people probably got fooled here. They probably saw this break of this level, got in calls, and got fooled. What I'm looking for Robinhood, excuse me, what I'm looking for Robinhood now is for my call entry, I want it in this range right here. So you can see kind of that support resistance level that I was talking about here, but then we also have this level here that drops down, and we have some consolidation in between the two. So ideally, if I can get a Robinhood pullback right back to $50, that's where I get back into the stock. Like I want Robinhood to dip back into this demand zone and come test this level here, this previous high here. That would be my ideal entry for Robinhood. If not, what I see here, to the upside, I wanted to break this like $57 level. So we can see right here in this range, this green candle here is where we come up. Oh, I'm sorry. This little red candle here, where we open up and then sell back down. I wanted to clear this level up here, like this $57 level. If we get like a daily close above that, this thing's gonna run back all the way up here. And look at this. We have a gap fill. So as traders, what we look for is gaps. So this thing gapped up here. So what a lot of people were looking for here was we have this gap. So what I mean by a gap is this candle here closes and then it opens up super high. And what a lot of people were looking for here is once this came up here and rejected and we came back into this cap on this daily candle, this was a good trade to the downside because we want gaps to fill down, or we want gaps to fill. But for this point, it's because we gapped up. We're looking for gap fills back to the downside, and that's what it did. It ran all the way back through all this area with no price action and dropped down. But yeah, above this $57 level, it's probably going back to all-time highs quickly. So above a daily close above 57 is what I'm looking for. And then we probably going back to 68. Even more ideally, I would level pullback on Robinhood back to this $50 level. I wanted to come test this bottom part of this demand zone. So it'll look like this, a pullback here, and then I'm aiming for this level here. So that's Robinhood. What is another one I wanted to look at? Let's do Tesla. In my last video, I did a video on Tesla as well. And I talked about I want to see Tesla clear. I said above like $92, $93, Tesla's probably out of there. But then, there's the psychological level of $300. And if you see here, this is beautiful. Look at this. Tesla's formed this bottom. We have this resistance level here. We have the same level here where we rejected down. And then this day, and actually the week, we closed the week above these two levels here. Now, what I do see is this level right here, this red wick, the high of it's at like 304. And if you come over here, this yellow circle here, we see that that's also a prior level, like 309. Really what I want to see is I want to see Tesla just clear $300. But the thing about Tesla is like once there's some excitement in the sentiment of the stock, and because it's been beaten down so long, like this thing can just go crazy. Like it could really just run back to $400 like in a week or two, and it's sub 300 right now. So Tesla broke above these two prior resistance levels. I still want to see it break 300. Honestly, I wouldn't be surprised if we open tomorrow on Monday and this thing's at like $300 to $310. I would not be surprised at all. And then yeah, so Tesla like top watch. Tesla had a volume increase on Friday. It broke above a couple of these key levels around 392, 393. And then if it gets above 300, I think it's just going to be green lights for investors to get in. That psychological level of 300, it also matches up with the chart as well. I'd be a little more comfortable if it was like 304, 305 that cleared. But the risk reward on Tesla is so great that you gotta kind of get in this trade. As you can see here, we call this a base being formed, this round little circle, and it basically goes here up here. So this is a double bottom, and it cleared the center point of this double bottom. So we're looking our first target. We wanted to clear this little 325, 330 range, but really the first target is like probably up here around 365, the high target. And then honestly, Tesla's crazy. Like this thing, all time high, almost $500. That thing, it could be fun. Tesla could be a $500 stock by like the end of June, y'all. That's how fast this shit happens. We're gonna watch. We have like a double bottom here. We broke above the center point of the double bottom. Also, it's kind of like a cup. And then if you see here, this little, it's almost like a cup and handle as well. This little cup mixed with this little curl. We call that a cup and handle. Tesla looks great. We saw a volume increase Friday. We had terrible news on. Look at it broke above this trend line too. Look at one touch, two touch, three touch, four. It broke above. It pulled back. It stayed within the base. It stayed above the trend line. It then now cleared the center point of this double bottom as well as this other resistance level. It's a lot of stuff to like about Tesla right now. That is a beautiful chart. We just want to see it clear 300 to 305, and then it's money time. Tesla contracts are expensive. If you can get like a January 2026 like $500 call, which is back to all time highs, or that's pretty deep out the money. If you can get a 2026 like $400 call on Tesla and just hold it for the next few months, 4, 5, 6, 7 months, above this 300 level, we probably going into the 400s for sure. But yeah, Tesla top watch for sure. And then what else did I want to look at? Hims. Hims is a monster, yo. Hims is crazy. If you don't got Hims on your watch list, add it. It's a little overextended. Well, Hims is crazy. I think it'll be $100 stock by the end of the year. But what we saw on Hims is this beautiful retest level of 25. So if you go back to the end of 2024, November 2024, you see here, this level here, we kind of reject, come down, drop below it, then we get a, look at this. Then look, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4. That's a strong level. So when this came down here, when this retested this on April 7th, that's the entry. And I'm sorry I didn't call that out because I actually bought stock right there at $25. So, and Hims is at $52 after like 3 weeks later. So Hims is up over 100% in 3 weeks. So my long-term position that I actually got in for my brother he's up 100% on that in 3 weeks, which is crazy. But yeah, anyway, that's past. If Hims ever gets back to $25, set an alert. Set an alert on whatever brokerage you're using. Set an alert. If Hims gets back to $26, $25, it's time to buy. What I'm looking for in the short term though is, as you can see here, this circle here, we have it come up to 45. What is it? $46. Rejects a little bit. Resistance right here does the same thing. $45, $46. Rejects back down here. Right now we are at $52. So I want to see a pullback down towards this $45 range. If Hims pulls back to $45, I will be getting into calls. Longer term calls, probably January 2026 with a target of all time high. But ideally, and this is only going to happen if the market is like sells off. So all these moves to the upside I'm talking about for individual stocks are only warranted if the market continues to go up. If the market starts dropping, these plays aren't going to play out. So I would love if the market pulled back a little bit for some of these entries. Like I said earlier, when it came to Robinhood, I wanted Robinhood to pull back like another $5, $5 to $7, so I can get my entry. That's only going to happen unless Robinhood has bad news or the market pulls back as a whole. If the market's going up, a lot of these, that's why you always kind of want to have like a pullback entry and then a breakout entry. So on Tesla, so on Robinhood, I'll show you guys real quick. On Robinhood, my pullback entry was the bottom of that demand zone at like, what was it, $50. So Robinhood's at like $58 right now, but the bottom of this little demand zone that I drew out for you guys is $50. That's my pullback entry. Now my breakout entry is if we can clear these little highs right here, this little $57 range. If we can clear above that and get a close above that, that's my other entry. So I have a pullback entry to where if the market sells off, I can get a better, cheaper price for my entry into calls. And then I have a breakout entry, which is if we break above a key level, then I'll get into that stock. So that's just something important to know there. But let's get back to him. So yeah, I'm looking for HIMs back to like $46. If I get that pullback, I'll see what the market looks like as a whole. If it looks like the market is approaching a key support as well too, I'll buy. If it looks like the market still has some time to drop, I'll wait down for like this $40 level. This is like the next key support right here. So for HIMs, I want to pull back to 46. I'll take a look at the market as a whole. If I see that we're coming up on some key support levels there, I'll get in that. I'll get in HIMs for calls. If it looks like the market's going to drop more, I'll be looking for HIMs to more downside, down towards $40. And yeah, and then I'll see how the market looks as a whole when HIMS is at $40. So that's what I'm always doing. I'm not just jumping into individual stocks blindly. I want it to correlate with how the market looks as a whole. I want pullbacks in individual stocks to match up with pullbacks with the market as a whole. What I mean by when I say that is I want pullbacks to supports of individual stocks to match up with pullbacks to supports of the market as a whole. When both those things line up, it's good signs for things to work out for you. Now so that's my pullback entry. I want $46, and then below that like $40 as an entry. When it comes to like a breakout target for HIMS as an entry, it already broke out, y'all. So HIMS does have a gap to fill. So we have a small gap here. So you can see here, this candle right here, it popped up here, but then it opened up super low. So HIMS has a small gap to fill here, which is just when I mean a gap fill is when there's a gap in price action from a daily close to a daily open. So there's price action that happens before market opens, but there's no real like trading happening within the trading day when you see these gaps. And usually, as traders, what we look for is we look for these gaps to fill. Like not all gaps fill, but most do. So as traders, what we look for is these gaps to fill. So HIMS has a gap to fill up to like $60. So I'm thinking if we don't see a pullback back to like 45, 46, HIMS might just run up to $60 first. Now, if it hits $50 and fills this gap, then we can look for a pullback. But like I said, this thing is a monster. HIMS can easily just run back to $75 if the market keeps going up. So yeah, HIMS is another top watch for me. So let's kind of just do a quick recap of what we went over today. The importance of the VIX. The VIX has key levels that it runs up to that it does not last at very long. So we saw that once we get above like the $35, $40 range, the VIX usually runs up to like 48.50. Once the VIX gets up to 48.50, that means that the market's probably dropping. So the VIX moves inversely to the market. So if the VIX is going up, the market's going down. So when you see the VIX spike crazy up into these 50s and 60s, past history has showed us over the last 15, 20, 25 years that the VIX does not stay at those levels very long. So when we get spikes in the VIX super high like that, we want to start buying stock because like I said, the VIX is going up, stocks are going down. So when we see the VIX spike to these high levels, that means just based off of the history that we've seen that the VIX is probably going to drop when it hits these levels, and it drops very quickly. So when the VIX is hitting 45, 50, 55, 60, we need to be buying stock as it falls. Ignore all the noise of all the fear in the market, all the headlines of the news. When the VIX is hitting these 50 to $60 levels, it's time to buy stock. And in a month, 2, 3 months, you will thank yourself for it. So we went over the importance of the VIX. We went over Tesla above 100, Tesla above 300 looks great. Really, Tesla above 292, 293 looked great already. We got that weekly close above those levels there. I just want some small confirmation above 300. Honestly, Tesla probably gonna open above $300 just because Friday was crazy. The sentiment of the stock is changing. The market gets really excited when Tesla has these turnarounds or look like it's about to start peaking back to the upside. Institutional investors come in, retail investors come in. It's a very hype stock. Hype stocks can be bad, but when you catch the right moves and when you see the right things and when you get up at the right time, it can be very lucrative for you. So we're watching Tesla, HIMS we just went over, and then Robinhood. So Tesla, HIMS, Robinhood are my three things that I'm really looking forward to this week. And one more thing that I would just like to go over with you guys that I think is important. In this video, I talked about basically moves to the upside. Stocks have been going up for the past month or two. I'm expecting that to continue, but also we also have to have some checks and balances between our biases. Like, yes, I'm expecting stocks to go up. There's a lot of charts that look very bullish, but we have to ask ourselves what happens if stocks go down and look for some of the reasons why they might go down. So one of the things I found, this is a chart by the account Trend Spider. I'm going to give him his credit on this. And it's significant. So this is the 50 SMA, which is the SMA is a slower moving average. So there's EMAs, there's SMAs, there's a double exponential moving averages, which is what I use a lot in my trading. And basically how to think about it is an SMA is it's like a slower moving average that tracks the last how many ever days of price action. So the 50 SMA on this chart is tracking the 50 closing prices, last 50 closing prices of the QQQ. This is QQQ chart, and it's taking an average of them. So this line is the average of the last 50 closing prices of QQQ. Now, you may ask, okay, what's the significance of that? And you don't really have to understand too much technically of what the SMA is, but you just have to be able to notice patterns when we approach this line and whether the patterns are valid. And you can't really deny that this right here, what we have, is valid. So back here in, it looks like August of 2024, we come down here to the 50 SMA and immediately bounce. Then we don't retest it until, middle of March, maybe April 2025. This last month, we tested here. It kind of comes down and then wicks back up, but we fall through. We drop below it here, but then this candle here, we kind of come above it and then we drop down. So we get to it, bounce here, we drop below it, come back and retest here, then drop down. And now what are we doing now? We're coming to retest it. So just the history of the last two or three times of how price action has reacted around this line, I think is a valid level. So what we want to do now is we want to look to see how we react this week around this 50 SMA level. For bullish investors, what we want to see is we want to see a daily, this is a weekly chart, we want to see a weekly close above this level. So if we get a weekly close above this level, it's probably a good sign for more upside. If we see us start to push down away from this level this week and we start to sell off, it's probably a good sign that we're going to head back down. Also, something to consider here is you see these little curves that are drawn. This is the left shoulder, the head, and what this chart is basically indicating or foreshadowing is that we might be in for a head and shoulders. A head and shoulders, it's pretty self-explanatory. LS stands for left shoulder, head here, and then this level here that we need to watch. If we end up retesting this level of like $500 on QQQ, we could see some reversal back down here just because it's a big setup that kind of looks like it might be a head and shoulders. But for right now, we're looking at how we're reacting around this 50 SMA. For bullish investors, we want to get above. If we start to see like we're selling off below it, then we might see some push down back into like the 450s, low 400s for QQQ. So yeah, that's it for the day. Let's watch Tesla, HIMS, Robinhood. Be aware of where the VIX is at. Check the VIX at least a couple times a week just to see what the volatility of the market is looking like. And yeah, let's have a good week in the market, folks. Thank you guys for watching episode 2 of Sunday Charts. Have a good one.